So our next question comes from AJ. AJ says, I've been a fan and listener of your podcast for over a year. I love your content, and I'd love to get your advice on the following. My spouse and I are U.S. citizens moving abroad for work for a few years. We'll be paid in U.S. dollars by a foreign entity with a combined annual income of over $1 million per year. However, our new jobs will not provide any sort of retirement plan. We currently have $1.5 million in our retirement accounts, think 401k and IRAs, and $2.5 million in liquid investments held in brokerage accounts, mostly in equities and ETFs. We also have 2 rental properties that are generating $10,000 a month in income and are cash flowing $3,000 a month after expenses. Do you guys have any guidance on how we could effectively continue to build our retirement-specific savings during these years abroad while maximizing tax efficiency and managing our portfolios? Specifically, how can we invest toward our U.S. retirement accounts, and how do we manage tax implications as it relates to the foreign earned income exclusion or maybe even foreign tax credits? And do you guys have any idea of alternative retirement saving vehicles or investment strategies available to high income expats beyond the traditional IRAs and brokerage accounts? Thanks in advance, AJ. So let's answer these questions one by one. How to maximize contributions to U.S. retirement accounts considering foreign earned income. You absolutely can still max out your traditional IRA. You can do a backdoor Roth IRA if you'd like, depending on your specific situation. But you and your spouse can absolutely put $7,000 a year, assuming you're under the age of 50, and you can do that just totally fine. Traditional IRA, max those out every year. You can also do a health savings account, an HSA, if you are eligible, right? So those 2025 limits are $8,550 for families. That's going to grow tax-free. You can use that in retirement as well. So those are the 2 like general ones that are pretty popular. I'm sure you guys have already looked into that. Another one is a solo 401k. If you are maybe earning this money. So like this only works if you're not employed by this company, but instead the company is paying maybe a LLC that you own or an S Corp that you own. And then through that S Corp, you're paying yourself. That's what I do, right? We get paid by different entities. And then I'm an employee of my own S Corp, and my S Corp has a solo 401k inside of it that allows me to contribute up to like $70,000 a year. So if you really want to figure out how to do all this stuff, maybe it's worth opening your own LLC and having them pay your LLC. But maybe that also complicates things given the foreign, aspect of this. But the other thing I did want to just quickly call out was what the foreign earned income exclusion was for people that might not be familiar. It's a U.S. tax provision that allows qualifying U.S. citizens and residents to exclude a certain amount of foreign earned income from U.S. taxation. So for example, in this person's specific instance, AJ and their spouse are able to essentially write off $253,000 from their combined earned income every year that they won't be taxed on. Now, it doesn't eliminate the U.S. tax obligation entirely. You still have to report worldwide income, but it definitely lowers your taxable income. But when it comes to any alternative retirement savings vehicles, like it really comes down to like the traditional IRA, which you're doing great on, I'm sure. The HSA, get that maxed out, that's fine. And if you can figure out how to have this foreign entity that you're getting paid $1 million from to pay you as a, S Corp or a partnership, whatever you have here with your spouse, when you're an employee of that, you guys both, I guess, can have them and both open up solo 401ks from different entities here. That can really turbocharge your retirement investing. Again, $70,000 a year.
Yeah, and the only thing I would add to this from my experience with Silly Bands and all of the income that I was getting from various countries is make sure you have the right person handling the structure and how this is done. Because I learned so much during this process, and you don't want to be in a situation where, let's say, your current accountant or lawyer is somebody that is not well versed in international tax law and doesn't understand these structures properly, because you don't want to find yourself setting something up incorrectly and then get dinged later on. That's the only thing I can add to this is hire experts for everything, because this is a little more complicated, especially if you're getting income from multiple countries like I was. So just keep that in mind, hire the expert, and make sure you do it all correctly.